the goal, let me see here. The goal is to regardless of the stocks, obviously keep energy high in some capacity. Be excited, even if the stocks aren't doing well. I love talking to you guys, even on the red days. Instead of just staring to the portfolio, hopefully we were able to talk through, any questions that you had. True Demon just messaged me saying that he wants to come on. Let's see. All right, I'm in. True Demon, can you hear me?
Yeah, I can hear you. How you doing?
Awesome. Let me make sure the stream can hear you. I'm great. How are you?
Um, I'm doing all right. I know everybody's a bit nervous though, so
Hmm.
I was watching the price action for the last couple of hours of the day. I've been at work all day long, so I haven't been paying too close attention until just now. Um, so I figured I'd come on and give my take on everything.
Please, yeah, please. I know that these past, let's see, when did so almost 24 hours now, because that, yeah, so that the original, what would you, the 90 million that came out and the 8K that came out on Progenity yesterday. I was actually waiting for BBIG's earnings, and then all of a sudden that came out. So it's almost been 24 hours of a lot of like uncertainty with Progenity, I feel. And I've been, you know, doing the best that I can to talk about what I'm seeing. I know a lot of things are up in the air right now. So I appreciate you coming on, and I know a lot of people have a lot of questions and a lot of concerns. And again, I appreciate you coming on, and I'm looking forward to hearing what you have to say.
Yeah, so I see that we're currently in a bearish channel. Also, some call it a bull flag because they tend to break upward. Um, at the moment, this is a short term from since yesterday. Obviously, nobody's happy to hear about dilution. I did just put out a video on it yesterday regarding the my interpretations of the filings, and although like nobody's ever excited to hear about dilution because it means that more shares are being sold into the market from the company, it adds more supply and it doesn't make it easier for things to squeeze. um, there's also reason to believe that the nature of how they put this dilution out there and the reason why they did a public at the market offering as opposed to going with a direct offering is because I suspect that they're uh, looking to profit off of some news that's likely to come out soon. So
Mm,
the CEO's been he has not dropped any names obviously, but he's now said on two separate occasions three partnerships are in the works and that they're waiting on data. So I read through that filing and there's very specific terms of that filing that have been mentioned that name that that name the reasons why they're going to use this 90 or so $1 million that they're going to raise from this market offering in order to do some case studies or some clinical studies. Uh,
okay.
yeah, and in addition to that, there was very specific language in there that said that they were working on contracting with manufacturing firms, which I found very interesting.
Right.
If they're speaking about contracting with manufacturing firms, and that means that they have immediate demand of going to market. And my suspicion is that they are about to drop everything all at the same time, and hence why this is load up time. So there's some background on the CEO that I was looking into. He actually specializes in market arrival and manufacturing product. So this CEO specifically comes into companies in order to oversee transitory changes where the company is going from emerging growth and capital raising, and they're trying to come up with new technology, or they're trying to develop a product, or they're trying to invent something, whatever the case may be. This guy always comes into the company in order to uh, make that transition happen, and he's got a lot of experience with it. So I'm
Okay.
actually I'm actually gonna pull up this particular CEO's resume here.
Okay. Do you want to share your screen, or do you want me to pull it up? How do you want to do it?
Why don't you go ahead and pull it up on yours? I'm actually recording as we speak because I figured that this will be easier. You can have your walkthrough of everything, and I'll go through mine, and we can each have our stuff put up separately, and people can look through our individual DD.
I love that I know this is a joke, but I love that you're a full-on YouTuber now, recording your own videos, uploading them. I love it.
I
I
don't
love it.
know.
Long overdue.
I don't know, man. Like I'm not a social media influencer, but
Yeah, yeah,
apparently
yeah.
everybody likes to receive everything audibly and visually, and nobody likes to read through a wall of text, which is something that I can, I can throw down like a 10,000 word essay in 10 minutes flat, but not everybody wants to take the time to go through all that.
Right.
Um,
And really quickly for everyone listening, you did make your YouTube channel. I know you tweeted about it. It's just at True Demon on YouTube. Similar to Twitter, just without the X. Maybe I
yes, man.
can put the link to your channel in the chat if people want to check it out.
Yeah, that'd be awesome.
Let me do that really quick. And then if you want to tell me or maybe send me in Discord the link to what you're looking at so I can pull it up on stream as well, that'd be awesome.
Yeah. So I'll send you a link actually to his LinkedIn resume because he's got a very explicit resume. You may not be able to see absolutely everything that I have out here, um, just because it's funny. But as in my work as a penetration tester, I have a lot of like junk accounts for different social media, so I
Mm,
connect with hundreds and hundreds of people to look at their profiles and things like that. You know,
right.
so let's
I
see.
I have to log into my LinkedIn really quickly. I had it a while ago. The password's somewhere. So I guess while I find that, I don't have it on my screen yet, but I'll get it soon.
Okay. Well, I'll go ahead and go through the gist of things, but I can also share my screen. I think if that
That
might
would
actually
honestly be easier. Yeah.
okay. We'll just do that. We'll just do that.
All right, let me pull up your um there's that. Okay, so it's currently just the picture of me and of your logo on Discord. So whenever you start sharing your screen, it should come up here.
Okay. Cool. So this is Mr. Adi Mohanty. I make it a point to research people as much as I possibly can, but
Hmm.
this guy has a very long standing resume uh, in pharma and biotech. So he's actually the CEO, or has been the CEO of several companies that were successful in the past. One of them being Biotime and Oncocyte. Oncocyte was a company, if I recall correctly, they were in the business of developing new clinical testing for detecting certain types of cancers that was rather successful, and he brought them through that transition period um, in order to make their delivery to market. And I'm not entirely sure if I have to do a little bit more research on Oncocyte as a company, but that was one that stuck out to me.
I'll have to do research into it too. That's interesting. I love, going down the rabbit hole of these different people. And just kind of figuring out, why are they there? What could they be doing? And I love this kind of research. Um, yeah, but I don't know about Oncocyte.
Yeah, so I'm looking into them a little bit here, and it looks as though they're still going through their funding period. So it looks like they may not be the best case study for it.
Okay.
But let me see, maybe I can do a little bit more research here. We're kind of doing this on the fly. I didn't research any of this
No,
ahead
it's
of
fine. I
time.
love it. I love it. Well, really quickly, while you do that, I'm gonna quickly pull up the chart. So what's interesting to me about Progenity is, we had the news come out last night. We had the 8K come out. We had everything come out, and a lot of people saw the 90 million, and it was unexpected, and so we immediately had that price. Let me actually come up here. We immediately had that price, the price just fall, and it fell so quickly. And in 15 minutes, we went from 450 to 350. It was very quick. And then as we read through it, we realized, well, hold on, this isn't an offering, and it's saying assuming sales of the at whatever the market close was. I think it was 489 on Friday. There roughly 18 million shares would be 90 million, or something in that range. And then once people realize, well, it's like hey, we're not doing this as of yet. We might do it in the future. It's like, okay, this isn't the best, but they didn't actually price and offering. There isn't an amount of shares at a specific price that was priced in yet. And so then when the market opened today, we had a really nice run up, right, to as high as 473. And I do want to get your opinion on something when we look at Ortex in just a second. But then ultimately hitting that high, the market just hit a lull and has just been selling off ever since. And what I noticed was as we were consolidating around this this range from right before power hour, or maybe right before 2 p.m. Excuse me, rather. So an hour before power hour, we were just consolidating for an hour straight. Then ultimately, with a little bit of volume and ultimately buying pressure finally coming into the stock, we were able to break out of that consolidation zone that I had drawn, that I have on my screen right here, get as high as 401, ultimately back down now at 490. But even just reclaiming 487 as that level of support, I think is quite significant. Now, I did want to ask with you, and we can do it after you talk about what you have on your screen here. Is just as I was going through Ortex, I noticed that 7 million shares were returned, and this is something that it's actually 7.6 right now million shares that were returned. And I know that with Ortex, not every share that they report as being borrowed is automatically sold short. And I want to reach out to them for confirmation on where this change could be coming from. But to see such a high amount of shares being returned, obviously there's no way to pinpoint directly. I've kind of given my thoughts on it previously in the show. I'm curious, do you have anything in terms of where you think that could be? Have you done any research into it or any thoughts on that? And we can kind of integrate that in with as well. I'm going to pull your screen back up here on stream.
Okay.
Or you stop sharing your screen. I'll
Yeah,
leave it up.
I
Pull
stopped
it
it
back
just
up.
for a second while I log into my Ortex accounts.
Yeah, please. I'll put it back up on the chart. But if you don't have any thoughts, it's still a developing story. And the synopsis of my thoughts are, again, not every share that is borrowed on Ortex is sold short automatically. Now, when it says the return shares under the live updates, right? It's about 7.7 million return shares. It's difficult to say exactly if all of those were sold short. And if they were covered, right? If those were short positions covered, was that the price action from this morning? Because if I had to bet, I would say no. I think a lot of people that saw Progenity at a lower price this morning were taking advantage of buying the dip, and then the overall market came in, right? And that's why we had a sell off. So if you have a differing opinion, I'd love to hear it. But it is interesting to see, again, 7.69 million shares being returned with only 1.27 being borrowed on the day, but still
Yeah.
high cost to borrow and still relatively high short interest.
Yeah, so actually, because of T2 settlement, this is something that's not well known. But because of T2 settlement, there's actually a 2-day lag time in return shares. When shares are borrowed, that gets reported right away because it leaves the broker's inventory, and the brokers are who report the data to Ortex. But when shares are returned, the day that they were actually bought to be returned don't settle until 2 days. So all of the return shares that you see in Ortex were actually bought 2 days ago, 2 trading days ago, I should say.
Okay.
So because of that, all that buying actually happened on November 19th. So I do think that it was partially shorts covering. It was a lot of
Mm.
shorts, and I think that we actually did see a bit of a squeeze as a result of this action. They probably got terrified, or they may have shorted from the top of this run that we had on Wednesday, the 17th, and then maybe bought in order to close those short positions early on in the day on the 19th. So what I suspect is going on is there's some shorts that are day trading this, or at the very least, there were some that maybe had gotten squeezed, or if they shorted at the top of this day, that they used this opportunity to get out while the getting was good. So
Mm.
all the same, we still have over 18 million shorts.
Right.
So let's kind of analyze this just a little bit because we still should be paying attention to the average days on loan and the number of loans that have been out. So as we can
Do you
see, we
want
have,
to really quickly pull up yours just so I don't have to try to pull it, like click on everything as you show it?
yeah, absolutely. My stream is still going, so you should be able to see my Artex.
Um, It right now it is just like your logo. Maybe if you stop sharing it and then start sharing it again, it should be good. This happens sometimes if you share it, unshare it, and then share it again. It'll get a little glitchy.
Oh
Maybe
yeah,
try.
I got you. Let's see. Maybe I'll just.
No worries if you can't. I can just mirror and pull up everything.
That should work. Okay, you
It's
should be able to
it,
see the Ortex now.
it's still showing your logo. It's fine if it doesn't work. I don't know
Really?
why sometimes
That's
Discord does that. I can just, if you call out what you're doing, pull it up. I have my Ortex pulled up.
that's really bizarre, and that actually will probably make things more difficult. Sorry, we'll take the time to make it work. Let me get
Okay.
let me get this
Okay, cool.
working.
So just to confirm one more time what you said, because I think this is significant. The return shares is T plus 2, which makes sense, but the borrowed shares is an immediate live update.
Yes, or at least that is the understanding that I have. That's simply because of T plus 2 settlement time. Since the buying to return takes place and then has to go through the clearing firms before the
Mm-hmm.
broker finally adds them to the inventory, that takes 2 days. And the reason why we get borrowed shares information so quickly is because the broker is who's reporting the data, so they can tell Ortex immediately when shares leave their inventory, so they don't have to wait for that settlement to report that data.
Okay, that makes sense. And I'll reach out to them. I that sounds correct to me. I'll reach out to them to confirm one more time as well. But that makes sense. Yeah, I don't know why Discord isn't showing your screen. It says like that you're sharing your screen, but then it's just I don't know if you have my screen pulled up. I could just pull up what I'm seeing to show you, but it's just showing a green screen.
That's really, really strange. Uh, did that fix it?
Still no,
Still no.
unfortunately. It's never happened with us before, so I'm not sure.
Yeah, I have no idea why it's not why that's not working. That's really, really bizarre.
Right. Um
All right. Well, I guess if that won't work, then what we'll do, go ahead and put your stream on Ortex, and I'll just tell you what to set up. And I've got your stream up in the background, so I'll be
Okay,
able to
awesome.
see.
Really quickly for the people in the chat, I had my stream up the whole time because True Demons wasn't working. People are saying we can see it, it's fine. That's because you guys were looking at my desktop, not True Demons. But I just, as you call it out, I can pull up the various things on Ortex and we'll make it work.
Okay, cool. So go ahead and set your range on Ortex just to be rather recent, like since April or so, and then what you'll want to do is turn off the days to cover and then just turn on average days on loan and average numbers on loan, and then the estimated short interest data. And then you should have just those three trend lines.
There we go.
Okay. So what you'll notice is back on about November the 5th is when we started seeing the shorts climbing pretty rapidly, and then we capped
Mm,
out at about November the 10th. And we had a short dip at that time. And it wasn't until we actually saw this large spike on the 17th that we noticed shorts at least beginning to consider covering. There was still a net borrow, so there were more shorts by the end of the day on the 17th, but they
mm,
finally started covering after that. So my guess is the shorts that have been playing this stock are still bearish on the stock overall. Just kind of playing devil's advocate here for a second. Progenity has a very tenuous financial position, or at least it did in the beginning of the year, because they were still raising capital and diluting themselves to pieces, and they were
mm-hmm.
relying entirely on debt from on loans that they had gotten through Ethereum and other members of their funded investors. So all these
All right.
hedge funds are basically propping up Progenity in terms of how much capital they had. Now a lot of that has changed, especially with this new capital raise that has just been announced. So let's think about this in terms of what the shorts are thinking. They, in the beginning of this play, see like before September, they saw this company as like rapidly dying, and they had slowly been piling on. And it makes sense when you see a run happening, especially if the company announces a dilution after a run to short it. So immediately going forward from October the 1st, you see the number of loans just absolutely skyrocketing. And at the same time, you see average days on loan dropping rapidly.
Mm.
That's a sign of new shorts coming in, lots of new loans, and the average number of days on loan goes down. But before that, there was like as far back as August the 25th, the average days on loan was more than a month. So a lot of the shorts that had been in these positions, they'd been holding these positions for a really long time. All the new games that are being played is evidence of algorithms that are coming in order to short the stock on the way down and then buy it on the way up. And that's what causes this Wyckoff accumulation pattern that we keep seeing. These are all algorithms that are playing this game, and they're basically just scalping trades. That's the only thing that these things do. Like algorithms are just there to either they're meant to they're making money regardless of what they're doing, or at least trying to, and just trying to scalp trades as the momentum shifts in one direction or the other. How they do that is entirely up to each hedge fund or how they've programmed it or where they've gotten this algorithm from. But all of them rely entirely on human psychology. And the Wyckoff pattern is such a consistent, methodical pattern that has repeatable evidence, and it's too perfect the number of times that it plays out exactly across every stock that it appears in. There's clear evidence when this pattern shows up, and that's why you can tell that it's an algorithm that's doing it. So
Right.
think think very carefully about how human psychology and human behavior dictate the success of these algorithms. It's entirely the reason why they're so good at it. They prey on people's fear because humans are entirely predictable, and at the same time, it's because of the buying and holding mentality that's kind of swept over social media that this
Mm.
really hasn't worked anymore. Algorithms have been really struggling to make money as these as these leaps and bounds happen, because going forward from late September, you see Progenity will leapfrog straight up, and then it'll come down a little bit, but then it'll level out completely. And that's because there's no new shares to buy from other people who are panicking. You get some shakeouts early on, but that's because there's other algorithms that are playing this as well, and they're competing with each other constantly.
Right. That makes sense. Yeah, I pulled up the Wyckoff accumulation pattern on screen as you were discussing it. It is something that I've been trying to do progressively more, like research into, because I'll admit it wasn't something I was fully aware of until recently. And I think it's so interesting how it, you know, for something as difficult to predict seemingly as price action, Progenity does seem to be following it to a certain extent. And it's so interesting that it plays out, like you said, in multiple plays as well. So really, really interesting stuff. Yeah, so I had the Ortex pulled up. You said you were watching the screen. Going through really quickly, guys, for those watching, the purple line is the short interest. The on loan number of loans is that beige color, and then the teal color is the average day on loan. And it's interesting to see how those charts kind of, or lines rather, move together, whether it be the average day on loan falling off like you mentioned in the end of August, beginning of September, and then all of a sudden the estimated short interest kind of skyrocketed there. But yeah, I was doing my best to follow along as you were saying everything, so I could show it on screen.
Yeah, I know it's a little bit difficult because we're just doing it ad hoc, but
Right.
um, I guess the best way to think of the number of shares on loan and the average days on loan are inversely related to each other. So you can tell what covering looks like based on those two lines. Those two figures will tell you when there is covering. If the average number of loans are going up and the average days on loan are dropping, then that means more shorts are coming in. If you see average days on loan rising and the number of loans dropping, then that means that new shorts are exiting. If you see average days on loan and number of loans dropping together, that means a mass covering. And the
Mm,
reason is because as the shorts that have been in for a longer period of time get out, the average days on loan will drop more rapidly because it shifts that average towards
right.
the short term. But when you see,
Interesting.
yeah, but when you see the average days on loan doing this like zigzag pattern skyward as it's rising, that's very clear evidence that there are trapped shorts that are in these positions. The average, you saw how many shorts jumped in. If you look at the line back in the end of September, when we had that run up from 150 to we'll say uh, from 150 to like 220, I think it was. A whole bunch of shorts came into those positions from that day forward, and then they stayed in it because you can see the number of loans in total along with the short interest. They're kind of moving together,
Mm,
but they're rising steadily, very steadily, and the average days on loan is continuing to climb. They're trending upward together, and that's how you know that all of these shorts are still trapped in their positions. No matter what happens when these average days on loan and the number of loans drops like this, look at compared to where we were in the beginning of September, how many loans are still out there. There's all the shorts that are playing these games right now, they're playing with short term loans. These are algorithms. They're just moving stuff back and forth constantly. But the net short position is still intact, and that's the short position that we're trying to squeeze.
right. Right. That makes sense. Very cool.
Yeah. I need to do
Okay.
I need to do a separate video that will kind of help that'll kind of help illustrate sort of the that'll kind of help illustrate sort of the relationship between all of this data on Ortex because it's a lot to go through and it's hard to read and it's hard to interpret everything unless you know a lot about, interpreting and inferring data from just raw math.
Right.
But let me show you something else. At the bottom of the figures, you can add the failure to deliver data, but also turn on the security lending volume. Okay. And you can turn
Okay.
off the days on loan and the number of loans. So we can just look at the short interest as it relates to the failures to deliver and the security lending volume. So what everybody should see is the purple line being short interest, the yellow bars will be the failures to deliver, and the security lending volume will be the number of that's just pure volume for short interest on a daily basis.
Yeah.
Take note of the trending climb in the security lending volume. Okay, remember that I mentioned that these are algorithms, and what the what the overall data should look like to you if you were to draw a line bottom of the from the bottom failure to deliver all the way back in August, and then draw a line through what you think is like pretty close to the center or the average of the FTDs. You'll notice this continuous steady climb, and the security lending volume is rising with it, and
Right.
these price increases are trending in it in that same direction. Something that I had observed early on when I was watching AMC's behavior is that as the FTDs start to accumulate, because that is what's happening here, these although these are daily numbers on failures to deliver that are open on a per day basis, you can see that they are trending upward. It's continuously climbing, and once it gets too severe, um, and we don't have to talk necessarily about all the reasons why failures to deliver accumulate, but notice that they start to form like almost a parabolic pattern. Let's take an example from AMC because it's much easier to see it as it's already played out.
Okay. Let me pull up. the right things here again. Like you said, very, very ad hoc, very on the fly. Okay.
Yeah, that's fine. So once again, turn on failures to deliver and the estimated short interest, and then look at AMC going back all the way to we'll say from January up until from January up until about June.
January till June.
Hmm.
Got it.
Now, from January, from well, more like from early December up until January. Take a look at those rising bars. Okay, the FTDs start really small, but the spikes start to get more and more severe as time goes on. There's always these gaps between them, but each week the FTDs continue to climb, and as they climb higher and higher and higher, you see the shorts continuously getting more and more volume in their trades. But you'll
Mm,
notice that historically, the short interest, it just kind of stays more or less steady. It's because of these algorithms that are trading constantly. And this is why buying and holding is so important, because as we refuse to sell and as they are unable to cause people to panic, the algorithms have to try harder and harder and harder in order to ramp up the fear factor. By doing so, they're taking out more and more shorts. They are failing to deliver on shares because they're not able to hit their targets where they buy low. The more people that are able to just put the fear aside and stop giving in to the human desire to run away from the unknown, the less these algorithms work and the more they actually bury themselves. It's not humans that are doing this to retail. It's all computers that are entirely depending on human psychology in order for them to function.
interesting.
Mm-hmm.
It is interesting to see it play out. I mean, AMC had obviously that crazy run up in the middle of June to see how it played out, and then came to a peak with over 27 million failures to deliver. It
Mm-hmm.
says on June 27th, which is that no, that's January 27th. Jeez.
Yeah.
Um,
And that was particularly significant just because the failures to deliver all hit at once when options expiration came, and it basically resulted in a ton of failures to deliver all at the same time because it came out of nowhere. January was as bad as it was for hedge funds and market makers because it was so unexpected and they had never seen it before. I think that they have tried to adjust things a little bit because you can see from March all the way to June, the FTDs stayed lower, but they still they still climbed continuously, and the short volume, no matter how no matter how severe the short volume got, those FTDs continued to climb. And
right.
something else that I had noticed is that these also line up with settlement periods. Like, for example, market makers, when they fail to deliver a stock, they only have 6 days, 6 trading days to settle that failure to deliver. And when you look at the FTD spikes, you'll notice a trend where they spike every 6 days. So
Wow.
that's how you can tell that market makers are part of what is causing this, but also the market makers are also facilitating hedge funds to short these companies. So there's kind of I would almost call it a parasitic relationship where hedge funds are constantly taking on bigger and bigger risk, and the market maker's job is to facilitate their trades. But in doing so, the market makers have to take an opposing position to the hedge fund, and they have to set that risk aside. So they have to account for that every single time. And again, if retail just completely baffles these algorithms by simply buying the stock and refusing to sell no matter what happens, or buying more and exhausting that supply, because what's happening is these algorithms are using shorts. They're borrowing shares in order to sell, and they attack during low volume periods of the day on purpose. It's because there's less volume, so they can use market orders to drive the price down faster.
Right.
They make it look natural, but It just isn't, because it plays out so perfectly, and it's so repeatable, and human behavior isn't quite like that. Only computers ever do things exactly the same way every single time they do them.
Mm,
So, but there are still people that are afraid, and there are still people that are really unsure of things. They don't know if this will work out. And then there's people that are in margin accounts that have to worry about getting margin called.
right,
So
right.
all of that risk, and all of that uncertainty certainly plays a factor. For those of us that are in a position to do it, that can continuously buy the dips, we are the ones that have to be willing to put ourselves on the line, and absorb that risk for the whole of retail. It's a really scary thing to do. It's basically like it's like putting yourself in front of a freight train and tying yourself to the tracks in a lot of ways. But
Jeez.
but you know, I'd like to I'd like to think that retail altogether, uh, as a unified movement, are able. It only works the more of us that actually stick to it. The more of us that stick to it, and the fewer of us who are willing to sell or give into that fear, the less these algorithms work. And we get to take advantage of it because they're methodical, they're predictable. Even though hedge funds and market makers think that retail is just dumb money and that we're so predictable and easy to take advantage of, it really we've just proven them wrong, because we got wise to this entire strategy that they use. They're preying on fear and uncertainty, and because of that, these algorithms are now no longer working. And because they can't be changed fast enough in order to account for this shift in mentality, there's there's nothing that they can do except what they've been doing. So when it dips, we buy more. We actually are taking away those algorithms' opportunity to buy those shares back at a discount, because they're trying to drive the price down as low as possible. When that happens and you see it hitting these new all-time lows, they're very predictable. It's following perfect Fibonacci levels. That happens for a reason. That's what those algorithms use. It's very mathematically based, and that's the only reason why this happens perfectly the same way every single time. When these levels get reached after they've hit their targets, they will buy up their shares slowly, and then they let people start to come back into the stock. They start to see it turning around, and then, oh, it's a reversal, and then everybody buys in, but they're doing it too late. And
Right.
then the algorithm sells out from underneath them again after they hit a new target, and then it dips again. And you'll notice the Wyckoff pattern does this. It's a really sharp dip. It'll start to rise, and then it starts to rise really fast, and then it'll fall off a cliff. Again, algorithms every single time. So when we see these dips coming, look for these Fibonacci levels and set yourselves limits if you want to play this. It's a risky thing to do. I'm not going to lie. It's extremely risky to do. But the math is damn near perfect.
One of the things that you said that really sticks out to me, I'm very interested in the human behavior side of things of the market, the psychological aspect of it. And one of the things that you said to me is, and this is actually, I want to echo what I said earlier on stream as well. The low volume days and the low volume moments, even we could specify to say, is when they're really able to attack and do serious damage. Obviously, I likened it to a puddle, or it's a very simplistic. It's very simplistic, but I liken to a puddle or versus a lake. With lower volume, your water bucket's going to do more to a puddle than with higher volume. You're going to do less to a lake. It's very, very basic, but it's a good visual representation, I think, of what I'm trying to say. And today we just did not get the amount of volume that we had been getting, over the past few days. We're at 55 million right now. I suspect we're going to close around in between 55 and 60 million on the day. This is coming off of 80 million yesterday, 122 million on Friday, 80 million on Thursday, and then 220 and 350 million on Wednesday and Tuesday. So I agree. I think that to me is the most interesting part of this, the deliberate attempt to scare people out of their positions with attacks when the market or people are quote unquote the most vulnerable with low volume. So I thought that part as well really interesting. It's kind of what I am really interested in when I look at these types of plays, how it is in a way predictable with lower volume. And then of course the overall market being down definitely did not help that at all. And I'm seeing, as we're saying this, we're already coming up to retest $4 for looks like the fourth time in the last hour and a half. So it seems like there's already this reversal. We're seeing potentially a cup and handle in the 1 minute as well. Brief technical analysis there, but it's, to me, it's interesting, and I appreciate your insight here. I feel like I learn every single time you hop on a call, so I appreciate you breaking that down as well.
Yeah, no problem. So I'll talk about the technicals very briefly. I don't know if you still can't see my screen, but I've got my Webull up just for the technical analysis. So
Should we try to? Someone mentioned this might work. Ending the call and just hopping right back on. Do you think it might be worth a shot?
yeah, let's do it.
All right, cool. This. Okay, cool. Maybe try again now.
Okay, maybe trying again right now.
There it is. I love it.
Oh, all right.
There it is. We got it.
Does it work? No? Okay, turn it off and turn it back on again. All right.
Sometimes it's really that simple. Let me frame it to fit. Okay, we're good. Take it away. All you.
All right. So basically, I'm following these Wyckoff patterns, okay, and they've been following these Fibonacci levels extremely well. I will very briefly go back and look at things on the daily, but the first thing to notice was we started this Wyckoff distribution all the way. Oh man, it's been a long time. Like the Wyckoff distribution uh, hit about. It must have started way back here in February of 2021. That's what caused this entire like fallout all the way down to 65 cents. From here, we went into an accumulation phase. Right about here is when people started to really notice that Progenity was overshorted, that they had really good products on the horizon, and that the technicals looked like they were going to turn around if they could get some good news. They did, and then we started this pattern. So here's where the story begins. So
It's
yeah, go ahead.
I was it's just so crazy to see this play out almost perfectly.
It really does. Like, look at the levels, okay? So we started out all the way back down here at 86 cents as our low, okay? We hit a accumulation phase, and then we went straight up to, I had Fibonacci levels drawn out here. Maybe I can go ahead and get those back.
Sure.
Okay. All right. So here's some quick Fibonacci levels. Man, this chart is so busy. I need to clear some of this off just to make it a little bit easier to see this.
It's okay. Mine sometimes looks like that too. Not
Okay.
nothing like that. I just have a ton of lines of various support and resistance, but I understand how it can get busy. But I think we can see.
Okay, cool. So let's take a look at these levels, all right? So these are the original fib levels from the low to the high to the low, okay? And immediately after that, we started following this Fibonacci pattern perfectly. The floor is always this red dashed line, starting from the bottom low here to the bottom of this candle. Okay, that's all that I did to draw this. And it's followed this line perfectly. It's never touched it again ever since. And as long as we continue to stay above this dashed line, the technicals say that this thing is going up. Okay, it's in a perfect megaphone pattern. The volatility is getting more and more severe. Like it goes up by a expanding channel, so it'll bounce from like now we're swinging by, geez, like 40% levels on a weekly basis. This was like the shortest term where we went 50-60% in 2 days. But anyway, these are perfect Fibonacci patterns, and even here you'll see that I'm on a Fibonacci timeline that I need to adjust like so. Okay, look at the green candles line up every single time. Look at these green candles lining up every single time. We started here, and then on the timeline end, we had a massive spike up. And then in the middle, sometimes we'll get a big volatility spike too. We'll come up, come back down, come back up again, come back down, and then big green candles always. Just a single day massive gain on the timelines. These are mathematical, methodical algorithms. They can be predicted. It is possible to see where this is going. And look at the Fibonacci levels: top, bottom, top, bottom, top, bottom, and then a run. So we have 3 tops, 3 bottoms, and a run. Now we have 1, 2 bottoms, and we're about to hit we're going to go up a little bit, and I guarantee you they're going to short the hell out of it, and we're going to bottom again. We might test as low as $3.23. When we get this brief run that's going to be coming here rather soon, I'm going to say within the next day or two, we're going to hit a top somewhere around 46, maybe to $5, but probably $4.62 or so. When we hit that, we're going to drop again, and they're going to try to make it as severe as possible. But just wait. That is when the spring will hit. I'm going to guess sometime between November the 26th and, yeah, November the 30th. And that's when the
Okay.
spring will hit. So if this continues to play out, if this pattern holds true, then we can expect to test the top of this trend line here. I'll go ahead and mark this one in green so everybody can see it very easily. There we go. All right. So I'm going to have to drop here, but I want everybody to get a really good look at this chart, take a screenshot, whatever. Remember this, okay? This pattern is followed perfectly. It happened here. Top, bottom, top, bottom, top, bottom, and then a run. Top, bottom, a run in the middle, and then like the trend keeps moving upward on these timelines. Exactly. It's a very methodical algorithm. Don't let them scare you. These things are depending on people's fear in order to give themselves discounts on the stock and in order to accumulate more shares. They know what this company is worth. Everybody should also be convinced of the value of this company. And if enough of us do that, they won't be able to get out of their short positions fast enough before it's too late.
Awesome. Yeah, I appreciate you exposing, again, myself included, to this algorithmic side of trading and manipulation. That, I mean, just putting it very specifically and clearly what's going on. I mean, seeing the lines on your chart, it literally follows it to a T. It's crazy. Um,
Oh,
did you say that you had to go?
I thought that I did, but I think that my meeting got canceled, so looks like
I
another room
know,
with it.
I know many people would be happy if that was the case. If you do, no worries. If you can stay, we'd love to have you.
It looks like I can stay. I think we're canceling. So talk
Awesome.
about last minute. It was supposed to start 2 minutes ago, and then everyone's like, "Yeah, it's almost Thanksgiving. Well, we'll just say forget it."
I love it. Speaking of Thanksgiving, how do you foresee that playing into what we're talking about here? Really quickly, I think it has had some effect on the overall market in some capacity. Today, a lot of these plays sold off, and it transcended Progenity. So unless these algorithms, obviously Progenity got hit harder, but unless these algorithms were on multiple stocks, which very well could be, I think Thanksgiving is playing a bit of a role with Black Friday coming up and everything else. So let me give you the alley oop of how do you see Thanksgiving and the upcoming, obviously tomorrow's a full day, but then off on Thursday, half day on Friday, playing into what we're looking at here.
So going into Christmas is always a bit of a difficult predictor, but it tends to actually be rather. It tends to be a mix of bearish and bullish because at that time people are taking money out of the market for Christmas gifts and purchases and things like that. They're also doing wash sales to lock in losses in order to get tax relief and things like that and write off stuff. But also people's Christmas bonuses start rolling in. So right before Christmas is usually when you see a massive return. But that's just kind of in the broader markets. It's kind of the same thing with like September, October being the bearish months, and then late November to late December is when it all comes back. So it's hard to tell with Progenity and stocks like that because it's a micro cap company, and a lot of I would think that this is just how I would trade them. But if I think the company is going to be valuable for the long term and I'm buying in at like sub $5, I wouldn't sell that for anything because that's that to me it wouldn't be enough to pull that money out and lose my exposure to it. If
Mm,
anything, I would be taking it out of ETFs and things like that. But that's just me. I don't
right.
really trade ETFs too often.
Mm-hmm. Okay. Interesting. So, is basically what you're saying that you think Progenity will be, not fully exempt from this, but won't kind of face it maybe like the broader markets will for Christmas or for Black Friday because there's a specific mission behind it, and you don't think that people will pull out of this? Is that correct?
Yeah, that's kind of what I'm thinking. Just because like most people that are doing 401ks and trading for retirement and things like that, they're not trading small cap companies like Progenity. So I think they tend to be immune from those monthly scheduled swings that happen pretty much every single year. Um, if people are investing in Progenity and companies like it, it's because they're investing specifically on their own personal investment accounts and they're not relying on a broker to do it for them. Brokers
Right.
brokers do blue chip stocks and ETFs and index funds. Like they don't trade stuff like this. They might expose somebody with a really aggressive account to like they might expose them to something like Progenity with 1 to 5% of their portfolio. It just it doesn't really seem to happen in my experience. So as far as like the broader market falling away, I don't expect Progenity to take that kind of a hit just because it's such a small cap stock. It's likely not to is more than likely to diverge from the market.
Okay. Cool. That's good to know. I addressed this many times on my stream today, but it might help for some people to hear it from you as well. People were referencing when we talked about T+2 as it pertained to today with the options contracts, the shares that would have to be delivered upon on Friday, kind of
Mm-hmm.
have to be settled by today. Otherwise, that we cross over into failure to deliver territory. Do you want to explain? A lot of people were assuming that meant not a few people, I should say, were assuming that meant a huge spike in price today, and we're surprised when we didn't see that. I said my piece on it, but it might help to come from you as well. Do you have any comments that you want to make on that?
Unfortunately, I would have to say that because of the dilution announcement, that created enough fear and panic that the shorts may have been able to use that as an opportunity to deliver on their obligations for options. So if it was likely market makers that wrote a lot of these options, they tend to do that. Um, and if they were hoping on getting the stock down to a lower price so that they would be able to deliver on those options even late, then they're probably already doing that. If they haven't, if they hadn't delta hedged enough of the options, or if they hadn't gotten control of the stock before Friday and they did end up failing to deliver today, then they've basically just kind of rolled out the calendar a little bit. By most, 6 days. Reason is
Okay.
because those market makers have that 6 day settlement time that they get to cover those failures to deliver. And pardon me, if I'm not mistaken, in 6 trading days is going to be November the 29th, is it not? So that's
I
going to be right before this timeline hits.
Right. Right. It's kind of almost weird how that lines up.
Yeah.
I was saying as well with T+2. I think so. It was interesting. Ortex reporting the return shares accounting for T+2, a bit a potential some shorts covering, and also I believe I think you touched on this as well. I really do believe we saw some hedging last week. Definitely not all of it, but just because of where the price closed the Friday before last week at 297 to then all the open interest, $4 plus. For me, it was $4. Once we hit that point, we would see hedging. I think that's what contributed to that as well. So I think, you know, and you mentioned this as well. The options contracts, some of them seem to be exercised last week, and I think that plays into everything we were looking at with options that expired last Friday as well.
Yeah, most definitely. And although market makers play a lot of these games, there's going to be some of these failures to deliver that are going to result in margin calls as well, and that's going to take time for brokers to settle those transactions also.
Mm,
So we have to keep in mind that because computers handle just about everything, and a lot of these transactions are happening entirely behind the scenes without the interruption or any input whatsoever from humans, that they're going to happen on methodical, very specific timelines. And I would venture to guess that because we can base those timelines around those 6-day and 15-day settlement periods that market makers and brokers respectively have to close failures to deliver before they receive penalties and trading restrictions.
mm,
So it just seems to be the nature of these uh, of these businesses that they will wait until the last minute when there is no other option, and then they'll find some way in order to kick the can down the road.
mm,
So like I said, everybody just has to be really patient. Progenity's doing really, really good. We are not in we are not in danger of the stock collapsing out from underneath of us. The company is very financially secure at this point. They have enough resting capital in raw cash that they can use to last for a whole nother year. That's just surviving. And like I said on my previous video when I talked in depth about the filing on the dilution, there is a difference between surviving and thriving. This company, this specific sale of stock is coming on the coattails of news that they need money to start manufacturing products and start working in order to engage in these partnerships that they've been teasing us with for the last month. The partnerships
mm.
are coming. That is a certainty. They have not dropped names, probably because of non disclosure agreements, but just wait. Please be patient. Patience
Right.
is key. Once these once these catalysts hit, they're going to hit all at the same time. They're going to be able to, once they have everything put in place, because this is what smart executives do. It is what intelligent businessmen do. They do not make promises that they cannot guarantee. If they are telling us that we need to wait for the data, it's because they need to complete clinical studies. If they need to put together cash for manufacturing, it's because they already have a partnership lined up and ready to go. But they need that manufacturing capability before they can just come out and say, hey, we're rolling out our new product and we're going now. They're not going to tell us until it's already worked out and the papers are signed. So we have to be at least a little understanding that businesses, especially businesses of the size of Pfizer and AbbVie and Novo Nordisk and Eli Lilly and whoever it else that could potentially be a partner with Progenity, they move slowly. They're very large, lumbering beasts, and there's a lot of legal paperwork that goes into it. So,
Mm.
although we would love for this thing to squeeze tomorrow, it's just going to take time.
Well said. Yeah. Agreed. Agreed. I look at the chat. I try to cater to what people are asking about and ask questions accordingly. Still a lot of questions on BBIG. I don't know if you got a chance to listen to earnings at all. I made a video on it, so I listened to the earnings call this morning.
Mm-hmm.
Um, if you have any updated thoughts, again, I see a lot of people asking on it. I want to try to cater to them as much as possible. If you have any thoughts, awesome. If it's still more of the same, it wasn't a huge addition compared to my overall position, maybe 10-20% addition, but I did add to my position a little bit at 3, or specifically at 303. Just, I understand it could drop more. It's just the lower it goes, again, looking at Lemotif and Cryptide, it's just the value of the company is there. I don't know if you listened to the earnings call. The big thing that came out today that I think hurt them is that that now Cryptide, the distribution date is expected to be early 2022. And when I read through, the SEC filings for Cryptide going through that Form 10, it said we'll actually expect it end of 2021. So it seems like almost another delay that wasn't really stated as a delay, but also the SEC filing for Cryptide is now saying different than what BBIG said on their earnings call today. So I feel like it's so close, it's just not there. But I don't want to go over my thoughts too much on it. I already have. So please take it away with anything else you have there.
Yeah, no problem. So I mean, just looking at the technicals, I know that they do look pretty bad. Earnings, I imagine, was I did not listen to the earnings call, but based on the reaction, I am judging that it wasn't the greatest call that everybody had hoped it would be.
Mm-hmm.
Um, the momentum has definitely been against this stock for a while, and I fully hold the executive team responsible for that. They have made a lot of promises that were honestly very empty. So I find that frustrating that they kind of took everybody for a ride, and making all these promises of bullish news and catalysts that they really could not cash. That being
Mm.
said, I would like to know what the new timelines are for these catalysts between Cryptide and Low Motive. So if you have those dates offhand, I'd appreciate them because
Yeah,
I haven't been listening.
more than happy to. Unfortunately, there's a lot of on or abouts or on or arounds. So I will give you what we know for sure. We know for sure that from the Form 10, we were expecting, somewhere in the in Form 10 of Cryptide, it said December 31st. Other places, it was like a blacked out dot, and then 2021 for the distribution date. That was said today now to expect that at the early 2020. So we didn't get a specific date on distribution date. Record date, in conjunction with that, I think the record date is tied to the distribution date, depending on the type of spinoff. I know that there's various things that go into that. We don't know the record date either, which I think is again why we saw the sell off of this magnitude. Because the short answer, what I'm basically trying to tell you, is we have time frames, not dates. And I suppose that's better than having dates and having them be empty promises, but not by much. So expect early 2022 for distribution, and probably for record date end of 2021, early 2022 for Lomotif. They confirmed today, I think we already knew this though, that they have 80% ownership interest, and that they're working with Advisor to monetize, and that it launched in India recently, which was substantial, but they don't have any specific dates on. I could be mistaken. I would love if anyone in the chat can correct me here, but they don't have any specific dates for when that is full. Like everything is kind of under that one umbrella company. Um, it seems like a lot of ranges, but not a lot of specific dates. And again, guys, please correct me if I misspoke there. But that based on everything that I was looking at and listening to today is kind of what they've announced.
Okay, yeah, I can definitely understand the why everybody's frustrated. Then, so I'll just be very perfectly honest. I would be selling calls, for the next couple of weeks, just because I don't see BBIG turning things around and just suddenly ripping and roaring past $6 again in the near future.
Mm,
Once those dates or time frames come through and they actually come through on their promises, I do see the long term value of BBIG. Um, I don't know. It's right at a major area of support right now. And if it breaks through this area of support, then honestly, we're looking at $2. So, however the market responds to what BBIG does next is going to determine where we sit for the next month until those dates hit. Um, I'm not in the business of bullshitting people. I lost a ton of money on BBIG, and I'm super pissed off at the executives letting everybody down and taking their investors for such a ride. I
mm,
It really does border on fiduciary breach of fiduciary responsibility at this point. They straight up just they made promises that they I feel didn't have any intention of keeping. So that is my perfectly honest opinion on it, and I hate to be that way. I know people are going to be pissed off at me for saying it, but I'm not going to tell people lies. Like BBIG's executives screwed up. They promised things and they've set dates and then they didn't stick to them and they delayed them more than 3 times. I don't care who you are in the professional world, that is absolutely unprofessional and there's no reason for it. And it's no wonder that the stock sold off. Um, I'm still sitting in my position with stupid losses and I hate it too. Um,
Hmm.
and I do see the long term potential for this company, but Ted Farnsworth and his yo-yos that are sitting on his board with him have to get their heads out of their asses and actually come through on their promises or don't make promises. And
Right. Right.
it's really that simple. And I have to be perfectly blunt about it. That
No,
being said,
please.
that being said, that being said, this is an area of support and there was a huge sell-off. This is a buying opportunity where we are very likely to see a rebound. If we're going to see a reversal, it's going to be here. Um, so this is the
Yeah.
moment. This is the moment where the company has an opportunity to actually give investors something to be hopeful towards and set proper expectations. Um, and kind of work on restoring trust in their shareholders. And if they fail to do that in the next, I would say, well, by the end of December, then I don't expect BBIG to be trading above $3 again for a while.
Yeah, I first of all, I really appreciate the honesty. I think that's important regardless, and that's something that I respect about you. It's something that I try to do myself, or not try. It's something that I will do regardless. Um, Part of the reason I bought is I hear you. This is it was again it wasn't the biggest position. It was maybe a 10 or 20% increase. I could go back and look at my overall position. It's the way I invest is a little bit differently. I have a starter position and then I average down as I see fit. Um, and so I had a position I was comfortable with BBIG. It just it's kept falling. I'm with you. I've lost money that I wish I didn't. Money that I wish I didn't. But this I agree with you. This is that level of reverse. Like it's either going to reverse. I agree with you at its level now, which it's thankfully held, or not. And then this becomes a play that had such potential, and it could be it might turn out to be the what if play for a while until ultimately things work out. And I'm with you, man. I think that it's such an interesting company with all the value that they can provide. I agree that I'm disappointed that the delays 3 times. It's like you said. What was the intent to ever deliver on time to meet any of those expectations? Because the original, if I'm not mistaken, the original record date was like end of October, and now here we are delayed for the maybe fourth time, hearing it's early 2022. So I agree with what you said. I appreciate you being honest and not sugarcoating. Yeah, I hope for BBIG's sake it can hold this $3 level. I think the final thing that I would say on it is this is just proof, in my opinion, why I won't go all in on any one play. I've definitely put money into BBIG at a substantial amount, but I have money that I'm putting into Progenity and other plays, and I haven't gone all in because if something like this does happen, which by the way, like I know you and I have talked about this play for a while. We did the due diligence on this. We were ready for you know, we knew what we were talking about and knew what we were doing with this one, and things out of our control happen that you really can't foresee unless you start to question everything. So I'm not mad at the way that I played it. I'm mad at the way it played out. I'm not even mad. I'm just disappointed. And I really hope it can hold 3. But I agree, man. And again, I appreciate the insight, and to not put a complete dampener on it. I still think it's a really interesting company. I'm still holding. I'd love to see it hold 3 and make a reversal and eventually put all of this in a distant rearview mirror, a distant memory. But
Yeah.
yeah,
I will say that now is probably the time to really start thinking about averaging down your position because I just looked at the Ortex data and this is a huge bullish change for me, okay? So the average the short interest just plummeted. Okay, it went through the floor. We've had a net return of 6.5%. So the borrowed change, which these are shares that they would have been bought to they would have been bought to close 2 days ago. Look at the number of loans that have dropped out and the average days on loan dropped. That tells you that long-term shorts have gotten out of their positions. There's a lot of shorts that are exiting their positions, and more than likely they have either taken the opportunity to make their escape, or they have left with profits after shorting from the top of this at the top of these trends here. So
Mm.
um, after seeing the average days on loan rising this steadily, and for it to fall back to almost this level back here from September 17th, then that tells me that a lot of the shorts that were getting killed from this range, and the ones that got in at the top of that range are more than likely exiting. And these are a lot of short term these are a lot of short term and long term shorts that are getting out of their positions, just based on what I'm seeing here in the Ortex trends. So you could take this as a sign that a reversal may be incoming. This, if you truly believe in BBIG, which I do, like I see the bull case for the company. I just wish that the executives weren't so incompetent. And that is a personal frustration of mine. And it's my choice to invest further in the stock at this point and average down my position, uh, given what I've seen, but it is still risky. So I don't want people to go into this totally uninformed, thinking that like it's going to go back up for sure. It's a risky play, and yeah, that's just, I guess that finishes up my thoughts.
Yeah, yeah. Well said. I want to clarify on some things I'm seeing in the chat. Um, I think you said it. I think I would just echo everything that you said. There's risk here because of its past. It has proven it can run up when things are going well and when things are, according to the timeline that they're set basically. I am a believer in Lemotif and Cryptide. I am, and I am going to, or I did rather, at that level of support that I was seeing, put in a average down once more. I actually wasn't fully aware that a lot of the shorts that got in got out. It makes sense to lock in profits. I'm gonna go over. I see your Ortex is up. It looks like 20. Let's see if I have it up here. 27% short interest of the float still. So it's still, compared to the float, seems like it's pretty highly shorted, which is interesting. But it is also interesting that you observed and just showed that some shorts that were in for a longer period of time got out. I don't know. I don't want people to think, just based off of what we said, it's a buy or a seller, whatever the case may be. I encourage people to do their own research, of course. It is interesting at this level to me.
Yeah,
Given everything that happened both ways, I can see the case. I currently am still holding because I believe in it, and I don't see it selling what could be the bottom. Should things go the way I see they could. If they keep falling, then I guess I got this one wrong. But we'll see.
yeah. It's interesting to me that that these tops and bottoms seem to come in twos. So I will go ahead and mention that BBIG has a tendency to make some really rapid ascensions in short periods of time. So it's really worth going back in the history of this data, and paying attention to what the price has done in the past. And that's the reason why I'm at least considering the possibilities of averaging down. Okay, so we see that the shorts have been extremely aggressive in the short term, but take a look at how these wedges continuously play out with BBIG. You'll notice that we've got. Well, let me actually pull up Weeble here, because that'll be a little bit
Sure.
easier for me to do some quick TA on this thing.
Sure. Yeah. Um, and again, just to further reiterate, it's not about being, overly negative or positive. I think it's about being realistic, which again I appreciate. It's at a point right now, right? It's one of these points where it's gonna kind of be foreboding of the future, which way it goes. And like you said, it is significant to me, which is I think part of the reason that I averaged down that this thing can reverse like on a dime. Like it's proven that it can in the past with the right amount. Like I could see the scenario where the right things start to come out and the management and Lisa does her thing and everything works itself out and things just reverse very quickly. I can definitely see that. Like you said, the bull case for it. So please do what you're about to do on Weeble.
Yeah, absolutely. So I'll go ahead and draw this falling wedge pattern that we've got here. Okay, we saw that this was an initial very unexpected squeeze, and I don't really remember what it was that caused this. This was just kind of volume out of nowhere. Um, but there was a ton of buys that came in out of here. Maybe this was shorts just exiting their position all at once. I don't know, but I took notice that after BBIG fell below its base of support here, all the way back down here, that it hung out for a while and consolidated for an extended period of time, and then just squeezed out of nowhere. We're having that same trend again shortly thereafter, and yet again another falling another falling wedge, um, and the squeeze was even more pronounced. So it
Mm,
went up by an additional 40 or so percent in value from the top of that previous squeeze. So now we're at a critical level of support once again. So we fell below this one and squeezed, then we fell below this one and squeezed, and now we're about to touch this one again. So I'm interested to see what the stock does here in the next couple of days. But I mean, if it continues to do these same patterns, it's interesting that these wedges are getting shorter and shorter and shorter, and the squeezes get taller and taller and taller. So this could be another algorithm. It's kind of weird how methodical it is. Like it looks like three sales,
mm,
just a
interesting.
yeah, a short pop and then a long consolidation and then a bigger pop, a, a slightly shorter consolidation, and then a really big pop. And now we're coming to the bottom of this. What I think could be a cup and handle. I think you said earlier. I agree. It does look like it could be the bottom of a cup and handle. So I'm not saying that it would squeeze tomorrow. If anything, I would be either buying shares or buying some really distant calls just for the sake of safety. But like if there is any time to buy a stock that you truly believe in, it is when it's having its worst day in the market. And this is a really, really bad day. Not sugarcoating anything, but
Mm,
I do see the possibility of reversal, especially looking at the OBV that's on balance volume. So I don't know if you've looked at OBV before, but the way that this works is with green bars, the on balance volume is the sum of volume in either a buying or selling direction. So if there's more buyers than sellers, then that gets added to the OBV. And if there's more sellers than buyers on a day, then that gets subtracted from the OBV. So when you see these plateaus um, when you see these plateaus in a stock, it's actually a bullish sign. So the plateaus will indicate consolidation, and I've noted that it is also a sign that an algorithm is playing with a stock because they'll attack during low volume periods, which results in less selling but more pronounced price action. And then they'll buy a ton, and then FOMO follows the buyer. So the algorithm will start buying a ton, and then FOMO kicks in, and then there's a huge amount of buying. And then the consolidation downwards leaves this long plateau or just this flat area in the OBV, and we're doing it again here. Plateau up, long consolidation, plateau up, long consolidation, plateau up, long consolidation. And now we're at a critical area of support. So again, if there's going to be a turnaround, it's probably going to be really soon. So I don't know. Maybe I'm stupid. Maybe maybe it's Maybelline. I don't know. I'm just gonna go ahead and go buy some calls in BBIG for I don't know January, and we'll just see what happens.
And hopefully it works out, man. I didn't get calls. I got shares today, but I hear you. Hopefully it works out, right? That's the goal. It is interesting doing that more macro analysis, looking at it like you said, sharper rises, less consolidation. It's so interesting to see that.
Yeah, I love OBV. I can't believe I didn't start using it right away. It's a really underrated indicator. It
So
really
I've
does. It really does tell you when stuff is being played with. Like I could show you Tesla, and you'll see the OBV doing some very, it's very consistent. The OBV rises very steadily, but when there's drops like this, the OBV follows it, and that's what you expect. Slow rise here in the price action, but the OBV is just like a little bump in the hill, and it follows the price action very naturally. You could do this with Microsoft, and you'll see the same exact thing. There's these pronounced sell-offs, and the OBV follows it. But as soon as you look at stocks like BBIG, you don't get that. There's a
right.
huge spike, and then the OBV stays stagnant, and then it spikes again. OBV stays stagnant, spike. OBV just goes up and then goes sideways, up and sideways, no matter how bad the selling gets. So
It's
it's really interesting is all I'm gonna say. It's really interesting. So yeah, I'm gonna go buy some calls tomorrow. What can I say?
that that is interesting. So I was gonna say I have glanced at OBV in the past and haven't used it. You may have convinced me to use it a little bit more and look at it a little bit more. It is crazy to see BBIG do that though, with just the spike up and then immediately consolidate
Yeah,
and did that like 3 times in a row. It's I can detect the curiosity in your voice, and it's exactly how I feel. It's like this is something that like we were looking at, we were in for a while now, and it was doing well, but it had the potential to do so much better. And now it's just been like a constant slow and steady disappointment over the last I don't know how long. But there's like something there right now.
yeah,
It seems like there's something there.
yeah. I mean, here, look at AMC. It did the same thing and went and spiked up and then moved sideways, spiked up and moved sideways. It's interesting that AMC's is they're much longer tails. But even GameStop, those of you in GameStop did the exact same thing. It's still doing it. So
Mm-hmm.
it's weird. There's algorithms that are playing with these stocks all the time. It's not a coincidence. So yeah, I don't know. I don't know, man. But like the OBV tells me when there's games being played, and eventually like there's it eventually comes to an end. You just don't know when that is gonna be.
Mm-hmm.
Yeah. So
Yeah.
anyway, I'll uh I'll leave it. I'll leave it at that. And
No, I'm glad that we mentioned it. I think we accurately highlighted on the, um, the disappointments that I think echoes most investors' sentiment, but also the underlying slight intrigue. Like, what do you do? Are you doing something? Like, what's going on there? So I like it. Really quickly, I got a question I wanted to see your opinion on. Occam's Phaser asks, are we currently in a Wyckoff distribution or accumulation right now? Um, it seems like we could be in phase D accumulation or phase A distribution
so I actually
for
think that
Progenity, by the way.
yeah, for Progenity. Okay. I do think that it's actually at the consolidation phase, phase D, because the move upward never completed on phase D, and we've been in an accumulation phase. The reason why is because you can tell by the volume. So let me pull up the daily chart here. Um, so with a Wyckoff distribution, which is the opposite of an accumulation, that's when shares are being like dumped into the market, but they're being done so methodically by an algorithm. What you'll see is there's significant volume in selling, but there's small volume buying. And that's because an algorithm is waiting for the price to start rising steadily, and then they'll hit it again, and it'll be a slower sell off, um, but it always results in the stock going in a downward direction over time. This
Mm.
is Progenities where you see huge green volume spikes as the price starts to trend in an upward direction. So the beginning of phase A in the Wyckoff accumulation would have been starting here at this second timeline level for the Fibonacci timeline. We went up to a top and then started selling off, and it creates like these very shallow U's. So it's a really slow consolidation. You could even draw it as a triangle, and at the tip of the triangle is when you finally get a breakout. Um, I could also probably pull up some images of the Wyckoff patterns as they appear on.
I had done that. I agree that I expected you to say phase D, but I just wanted to echo that. Let's
Yeah.
see, is there any other questions you guys want me to ask? Or by the way, do you have any other things that you want to mention? So far, super informative, and I'm really happy that you had time to come on here and that your meeting got canceled. I hope everything obviously gets taken care of. But
Oh yeah, no, it
um,
was just a weekly meeting for stuff that we're doing on a weekly basis. But
I gotcha.
it's Thanksgiving, so um, let's see. Can you see my
I can.
Firefox? Yeah, okay. So if we compare the charts, this one's a bit more scattered because the moves are very pronounced. So for those of you looking on your own screens, take a look at Progenity's movements, and you will notice that even though I am convinced we're in a Wyckoff, it doesn't perfectly fit a Wyckoff because these Wyckoffs are very volatile in their movements. They'll swing by 20-30%, and the sell-offs are super pronounced. But
Mm,
the that hasn't happened because the algorithms are stumped by the fact that they can't convince retail to panic and sell off their shares. So I want that the fact that the selling is, even though it's really bad, it's not as bad as you would see normally in another Wyckoff. I would challenge you to do your own due diligence and homework on what other Wyckoffs have happened in the past and pull up some examples, and you will see micro cap stocks that have moved by 50 to 60% to the downside in a matter of days. Or on long-term trends, it can be these things can happen over the course of several months. So it can happen on any time frame, but it's the movement of these patterns that gives it away. So looking from the point where it hit the bottom, this would have been when Progenity hit its worst time, and it hit like at about, I would say, 86 cents, or between 65 and 86 cents. And at that point, it starts to show a little bit of strength. And I'm sorry that I cannot show both my Weeble and the accumulation at the same time.
yeah, I was. People were telling me the best way to do that is just to actually go and draw it. So maybe I'll draw on the chart a little bit later to try
Yeah.
to get that. I wish
Well, in any
Weeble
case, the
or
thing that I did want to show was that the sign of strength happened. Okay, and when we had
mm,
that huge run up, we we had the spring when we bounced off of like $3 and no, actually it was like 280. Whatever we closed at the Friday before last, we closed at like $2.80, and then we immediately had a run. So that would have been the spring. So we hit this bottom at 280, and then the very next Monday we started to make our climb, and then suddenly the gamma ramp took control. We had a sign of strength. It took us all the way back up to $6.40, and then we dropped back down and we hit a low. Like it was a really it looked like a huge sell off to everybody else, but to me, I was just like, this is perfect. And
mm,
I will confess, I day traded my calls during the sign of strength. I sold it around like 580, and then I doubled my position once we hit the bottom of that, and I ended up buying even more calls than I started with. So
that's
you can take advantage of these very easily if you know what you're looking for. So this consolidation phase, this has been the past week. So ever since we closed this last Friday at let's see, this would have been like Wednesday, Thursday, and we hit that top of $6.40 and then drop back down. That's what that Thursday, Friday looked like, and we closed back down at 480. Now we're going to do this bounce. Three tops, 3 bottoms, and then take off. They're very methodical, very predictable patterns. 3 tops, 1, 2, 3, 3 bottoms, 1, 2, 3, take off. These every single time. So just be patient when it comes to the when letting these things play out on the timeline, because it's the algorithms that are dictating when they're going to happen. But if you can tune into what they are about to do, you can take advantage, you can day trade calls. But the simplest thing to do is to just buy and hold and don't worry about it. Like
Right.
just let it do its thing. Look for those dips, buy more if you can, and just let it ride. Don't panic, just be patient.
Well said. Well said. Yeah. Um, I think I want to echo what you said. If the simplest way to do it, if you believe in this squeeze and the Wyckoff accumulation, everything else is to buy and hold. If you wanna if you see like you just said, if you see like a potential sign of strength and you wanna take a little bit off and then get more later on, I don't see anything wrong with that. Um, again, I think either way, the biggest thing I'm very repetitive with this is just having a plan in place and then trying to unemotionally stick to that plan regardless of what happens. So that way, when the algorithm hits and we're driven to the downside, you know what you want to do.
Exactly. Um, Now that I have my Weeble up, I can kind of re-illustrate everything that we had seen. The 3 tops, 3 bottoms, and then we took off briefly. Then now we're going to see it again. 3 tops, 1, 2, 3, 3 bottoms, 1, 2, 3. Missing an arrow here, but just imagine a bottom somewhere around here, like just above this red dashed line. So we are going to have another top very soon, probably in the next day or two, and then the next day or two after that are going to be a little rough. So just expect some volatility, but it's going to be a lot less volatility. Watch for this triangle, this wedge pattern to play out and complete. If and we may even break below to the downside very sharply. This is the time when the algorithms are going to try very hard to scare people. They're going to let it run for a little while and get people to buy in on the upside. I'm going to challenge you to be patient. Be patient. Let it run and then wait. It will drop out again. And we're going to have to retest these somewhere between 380, 390 again. Okay. It's going to happen. Just be ready for it. Once we hit those levels of support, then just let the trend complete, and that is in my mind the last opportunity that you have to buy before takeoff.
Mm.
I'm expecting it to come sometime between, I'm just going to say somewhere between November 29th and December 17th. So um, it can
Oh
happen.
wow.
I think it's going to be very soon. And these catalysts that are setting up, they're perfectly staged for an announcement that's going to absolutely crush expectations. So
Mm.
just wait for it to happen. It's not a coincidence that they're deciding to dilute with a public offering through an independent sales agent. They get to dictate to the sales agent, hey, we're going to make some announcements later on, and yeah, just wait for that to happen before you sell any of our shares. All of this dilution that's just been announced and all of that stuff, they have timed this very specifically because they have something to say, and it's going to be said soon. Just wait for it to happen and try not to panic in the meanwhile when the algorithms are playing their games. It's not humans doing this, okay? It's not paper hands, it's not people freaking out. It's just computers that are trying to make it look like human behavior. And they're trying to take advantage of other humans' behavior. Don't give them that discount and don't give them that opportunity to take your money. That's all I got to
Mm.
say.
I like it. I like it. I remember us talking, I don't know, maybe 3 or 4 weeks ago, maybe 2 or 3 weeks ago about Progenity, and we were both in agreement. We expected to see something. I remember you mentioned like end of November, early December, mid December, and I was kind of in agreement with that. It is interesting to see, flash forward or fast forward rather, those 2 or 3 weeks where we're almost perfectly playing kind of what we were expecting to see as we look to gear up for potentially one big move to the upside. So I like it.
Yeah,
I like it.
I'm I'm extremely thrilled for what's about to happen. I'm just not I'm not scared anymore. Watching these patterns play out as consistently as they have just makes it easy for me to keep my conviction, because I know the company's a good company, and I know that other stock traders and hedge funds, they're not stupid. They know that Progenity is going to go up in the long term. I think that
Right.
whoever's shorting it is just shorting it because they're really desperate to get out of their position right now, and they really screwed themselves. They didn't
Mm.
expect all these announcements to hit at the same time, so they're trying to delay the inevitable and get out at the best price they can. But you have algorithms that are competing with each other, so
Yeah.
somebody's going to be left holding the bag, but it ain't going to be me. I'm going to stay in the stock, and I know what it's going to be worth in the next 5, 10 years. So I don't care what it does in the short term. When this thing when this thing finally squeezes, great. I'll use that as my opportunity to, you know, sell my calls and get some more money. Wait for that dip and buy some more, and I'll be hanging on to this thing for life because it's a really good stock. The company is a really good company. It's going to be changing lives here in a few decades.
Yeah, yeah, I did actually get a chance over the weekend to upload. I called it Progenity versus PROG stock. The difference between the stock itself, which we just did a ton of technical analysis and looked very, very like what are the algorithms, what are the technical, all the above, and then notice we haven't said anything about the actual company itself. And I find it's a lot easier to invest in something when you have belief and conviction in both of those and understanding that they're oftentimes looked at separately.
Yeah.
And one other thing that you said that I really like to echo again is you said you weren't scared anymore. And that would imply that, like everyone else, because I think this can help with conviction a lot. Like everyone else, you at one point in time were daunted by these big sell-offs. I know I definitely have been. That is normal. That is human behavior. These algorithms are good at what they do, objectively. That's why they work. That's why they run, because they're profitable. Um, but studying and doing the research and doing what is necessary to understand what we're looking at, I think is like you said, it has given you the belief in what you are saying and studying and researching and putting your money behind to ultimately pay off. And that comes as a result of doing the work. And so I wanted to echo that one more time so people can understand it's okay, like, to be worried about a stock going down. Just let that worry and that uncertainty catalyze your research to really understand what's going on, and then move accordingly. So I did want to echo that. I thought that was good.
Yeah, yeah, well said.
Thank you. Just echoing what you said. So well said to you as well. Anything else you want to highlight? More than happy to stay on. If you have things to do, definitely let me know. I'm definitely gonna upload. You said you're gonna upload this one more time. Quick plug for everyone in here. You have a YouTube channel. It's True Demon on YouTube. You mentioned, or you broke down in pretty good depth. I didn't get a chance to watch all of it yet, but your opinion on the offering that came out yesterday. I will have what we just talked about uploaded on my channel. You said you would have it on yours, so definitely people should go check you out over there. Anything else you want to talk about?
Um, no, I mean that's pretty much everything that I have between Progenity. We talked a little bit about BBIG, which
Mm-hmm.
is kind of nice. I have honestly been a little bit jaded, so I was intentionally just not talking about it because I didn't want to add on to how everybody else was feeling because I didn't have very good things to say. But after looking at the charts and seeing the technicals, I think that it's probably due for a turnaround at this point. I'm not basing that on any evidence uh, of how the company is performing, and I still think that their executives are being total asshats. But when I look at the technicals, I do trust them to a degree, and it looks like a reversal pattern to me.
Yeah.
And we learned a little bit about reading Ortex, so that's a full day at work for me.
Yeah, agreed, man. Agreed. Yeah, I agree. I think again, I've always tried to lean with, giving BBIG the benefit of a doubt while also understanding that there were some missteps along the way. And I really hope that this thing rebounds and becomes what I think we both see the vision for what it could become. So I'm glad that we mentioned that, one more time. I'm glad that you put up the Ortex. You're able to highlight some things on BBIG that I hadn't previously. So I appreciate that. People are asking about SENS. You and I broke down Sensonics. I think Hoot Money did as well. I have that other video on my channel, breaking down everything on Sensonics, Dexcom, all the above, pretty in depth as well. Down to 338, like I told you. Again, this isn't something I do with all the plays, but I mean, you're going to see right there on your screen. There's a clear, I call it sell demand zone, right? For at that $4 level where eventually the price falls back down. And I'd imagine it takes the FDA approval maybe in the US for the 180-day Eversense sensor to catalyze a run up to break past that. So again, this speaking on how people can play it their own ways, I took some off the top. I pulled out my cost basis at, I think it was 380, 390, and I will probably be adding just same amount of money, more shares now at a lower amount. But if you want to add any other thoughts there, please.
Yeah, it's pretty much as you said. We're waiting on the FDA approval to come through, and the FDA. This has not been Sensionic's fault. They've been very good and transparent about all of their news releases, and they have been working in the background to complete all of their clinical studies on time to get good data on their products, and also to push the ball down the field in terms of getting their 360-day product out and ready to go, and also talking about partnerships with other companies such as Beta Bionics that manufactures insulin pumps that would integrate theoretically with their sensors. So all of that stuff they've been doing in the background, and the company. Their CEO is a very wholesome guy, very down to earth guy, and also a doctor. So they're um, I have no qualms about their performance as they have been working through all of this stuff with COVID and trying to get the FDA to um, expedite their FDA review. But sadly, we just have to wait for that to come. At this point, though, it looks to me that we're coming to the end of the year now, and the FDA review has been overdue as of December. It will have been in review for a year,
Hmm.
ever since December the 10th, I believe. So at this point, the FDA has completely neglected its other responsibilities in order to deal with things with COVID. But
Mm,
now that Pfizer has gotten their emergency approval for their antiviral drug to treat COVID infections, and they've also gotten more of their vaccines approved for use in children and teenagers, I think that we're more than likely going to see COVID starting to come finally to a close. And
mm,
I cannot wait to walk outside without a mask on. I cannot wait. But
right.
um, yeah, FDA approval I would expect to come within the next 90 days here, just because I think that the FDA is finally now catching up, and the FDA reviews that were preceding Sensionics have already completed. So it looks like they are finally starting to catch up. So it could hit at any day, but um, I'm not expecting anything for the next 90 days or so. So
Yeah.
that being said, I'm going to go ahead and average up my position a little bit. Um, I'm hoping that Progenity will take off first so that I can get more of Sensionics, um,
Mm,
and probably some AMC as well. But between Sensionics, Progenity, and AMC, I'm pretty fully tapped out.
right. No, that makes sense. Really quickly, I wanted you to see it too. Can you type in check real quick? I just want to show people what the power of FDA approval looks like.
Oh yeah,
CHEK. Um, this was a play that if you zoom out, I played for FDA approval. You see where it ran up. Are you on the daily right now?
this is the daily. Yeah.
Okay, so you see where it ran up from. I think it was there from like 75 cents to $3 in like a day or two.
Oh really?
FDA
Nice.
approval is powerful, guys. It can do some things really quickly.
Yeah, and that's the
I
thing.
for
Like, sorry, go ahead. This is your
I forget which one of those spikes it was. But I remember it ran up. It was up a few. I think it was a few 100% in like a day, and then I took like a lot off the table. But it isn't really specific to anything we were talking about, other than FDA approval is a very powerful catalyst, especially for something that's as revolutionizing in a much needed space like the 180-day sensor is for Sensonics. Like, we're talking about FDA approval for something that could quite literally be used by everyone and change the course of people's lives.
Oh yeah, absolutely. As a matter of fact, this entire run up that happened in January up through February, this was the news that hit like mid December that they were just putting their 180-day product into review. That's all that news was, and look at how much it ran.
Yep.
I think that there was also a little bit of sympathy for the GameStop squeeze and things like that, because along with AMC, when it squeezed in February a little bit, well, it mainly just kind of went on a run, but Sensionics was also heavily shorted, so a lot of people jumped in to attack shorts as well. So
Mm.
that was part of it. Now that I actually look at Sensionics, it's following a Wyckoff accumulation. I just happened to notice it. This is the beginning of a Wyckoff accumulation. Look at it. There's a huge surge of volume, and then the volume slowly died off, and then during low volume, huge sell-offs to drive down the price.
Uh-huh.
And now, yeah, there's still low volume here, and the volume's getting lower and lower and lower and lower as time goes on. So we're coming to the end of a very long wedge here.
Yeah.
I just
Yeah,
wanted.
it's
I'm sorry. Now I have to look at this because I have
please,
to draw this out.
please.
Okay.
I'm glad we
So
mentioned it.
yeah, that's kind of funny. All right. So yeah, my guess was going to be sometime in January was at the latest when the FDA approval was going to be announced. But I now also want to draw a Fibonacci timeline. I guess we're gonna take some lessons in in Fibonacci's.
Right, and do it in real time.
Fibonacci is king. I love these. Was really I really didn't understand them at first. Like I know what the Fibonacci formula is. It's related to the golden ratio if you're in art. Um, but it's
Yeah.
basically it's like a think of like a slow spiral um, outward in a perfect growth pattern. And for whatever reason, Fibonacci shows up very consistently in um, in the world of stock trading. It happens in the world. It has to do with like perfect symmetry and things like that, and math. It shows up a lot in math also, especially with chaos theory and calculus, and even in the orbit of galaxies. Like the Fibonacci actually appears in the way that the Milky Way spiral galaxy's arms grow outward. It's really cool. It shows up
Wow.
in the universe everywhere. So like it's like I don't know why, but I'm like, wow, this is perfect. Like math that can make me money, great.
Right.
So anyway, yeah, I'm looking at the timelines, and I'm not seeing as much of a lineup here. It's close, but not quite.
Off by like a day. Is am I
Yeah,
seeing that right? Yeah.
yeah, almost off by a day. But let's see. Yeah, yeah, right after Christmas is when the next timeline is due to hit. So I'm betting. Hey, I don't know if the Fibonacci is like you is meant to tell the future or anything like that, but if we follow this trend line, then we're due to form a cup and handle at some point and retest this support at $4 here by sometime around December 17th. If FDA approval came within the next 90 days, or actually within the next yeah, almost exactly within the next 90 days, then we would see, or 30 days, sorry. So if we actually saw FDA approval come in within the next 30 days, that would actually line up with this. So I'm just gonna say it right now. If in if before Christmas FDA approval is announced on Sensionics, then Fibonacci timelines can tell the future, and I am going to use it for all of my trading strategies for the rest of my life.
Right. Because this isn't even technical analysis at this point. This is like fortune telling. FDA approval will be delayed and then given on this date.
Yeah,
That's
it's kind of funny.
right, especially because you said it. I didn't know it pertained to the golden ratio. Those are always two different things in my mind. I obviously know the golden ratio is like the most aesthetically appealing proportionality of the face. It's very proportional. You can actually like measure it, I think, with your fingers or something weird like that. Um,
Yeah,
but then from that to the universe to stocks, it's beginning to see a pattern that if it's everywhere, maybe it does tell the future a little bit.
yeah. I mean, I'm just gonna show you what it pulls up on Google Images, but like the what you see here, the first spiral, that's the Fibonacci spiral growing from 0 to 1 to 3 to 5 to 8 to 13 to 21, and that's the perfect ratio according to the Fibonacci scale. And then you look at
Mm.
the spiral arms of the galaxy, and it does the exact same things. And like even flowers, ferns, fossil shells, crustaceans,
I actually
plant
remember.
structures, and even hurricanes follow Fibonacci's. It's wild. It's just crazy how it appears everywhere in the world in the universe. So I don't
Yeah,
know.
I actually remember
Completely
seeing
divergent
that.
from talk of stocks, but now we're just talking
Literally.
about math. But
Why not, right? Why not? I
yeah,
remember
why not?
seeing this in some type of video. When I go to bed, I find it's like helpful to listen to something, and I've been listening to. I want to go back and pull up that video because it was really interesting. But I remember seeing that, and I'm having a bit of a aha moment as different things in my life are starting to, come together that really didn't feel like they ever would, which is it's funny. I had one other congruency or similarity I want to draw. So if you could go back to Progenity on your screen, just because I'm still streaming your screen. Um, you mentioned the you expected you said November 29th to December 17th was that range, right? Ish. Is that correct?
Sorry, I just realized I had my mute on.
You're okay.
Yeah, that's right. And the Fibonacci timeline that I've drawn is set to hit on November the 30th, which is going to be that is going to be on next Tuesday.
Okay. But what's interesting to me is you mentioned December 17th is that end date. The monthly options for December expire on December 17th, and we already have a beautiful setup for what could be an amazing run up the week ending ending December 17th. I
Yeah,
believe it's you have them right here. Yeah, I don't even have to remember. There's a lot of open interest already showing there, which is amazing.
yeah. I was actually expecting the open interest to start climbing pretty rapidly. It's going to get pretty serious here in the near term as well. The so I actually wrote out on my notes back in October. This is just in my hands, so I can't show everybody. But
Mm.
back in October, leading up to, I think I wrote this out on like October the 1st. The out the money options, or the total options, call options for the October 15th expiration were 106,000. And at that time, November the 19th was like it was like less than 40,000 options in total. And by the end,
Wow.
yeah, and by the time we had options expiration, we had that many options just on a single strike. So
I know.
the options chain, like, don't worry about this options chain. It's going to grow, okay? It's going to grow fast. A lot of people will wait until like the last 2 weeks before expiration for this to actually play out. But for me, I'm actually going to be waiting until I'm going to be waiting as we draw to the close on next week's options expiration to really load up on my positions. And I think that we're probably going to see a run here very soon. Not a big one, but like we'll see some volatility here. So I'll day trade some of those options, and then I'll just let theta take away some value from the options and buy them in a little bit cheaper. Because right now
Hmm.
we're in a consolidation phase, so that's going to continue. And the dilution is also like just generally everybody sees that as bad news. I don't think it's bad news personally. I see what they're doing and where it's going, where that money's going to go. But just speaking from purely a psychological standpoint, what humans are going to tend to do. People are just going to be like, and just panic a little bit. So I'm going to take advantage of that, and my strategy is going to be to wait for all of that to finish happening and for the algorithms to be done playing their games. And I'm going to wait for them to really hammer the stock and take advantage of whatever dip comes. And I've got a few weekly call options that I'm just day trading back and forth. So as soon as I can get out of those, I'm going to set that money aside. I'm going to wait for a nice dip buying opportunity, and I'm going to load the hell up on every single call option and share that I can get my hands on. I'm going to do like a 50-50 ratio, just because
Mm,
I'm that convinced that we're this close. And for me, my safety play is to go with 80% shares and then 10% 10% distant calls, like long calls,
mm.
like past January, February, and then 10% short calls that are expiring within 30 days.
I was gonna say 50-50 is quite bullish on the short term.
I'm very bullish on the short term.
Yeah.
Progenity, I mean, when I see the Wyckoff pattern playing out this perfectly and I see the next leg up coming up in the future, I'm like, okay, well, I mean, I'm willing to risk a few $1,000s on the chance of making millions. Why wouldn't I? But
Fair enough.
I understand that a lot of people aren't in that position, and I don't want to say something that would put me in hot water with the law or, get sued, because I can't guarantee any of this stuff. Like,
Yep.
obviously none of this is financial advice, and I can't tell the future. I'm just betting on the future and what I've seen happen in the trends. But it's just trends. They're just lines on a chart. No matter how good the past has indicated something, it is not a guarantee of what the future holds. There's no way that I can ever possibly promise anything, and so that's why I say make your own decisions. I'm not the one who's making you click that buy button. It's up to
Yep.
you.
Well said. So it's a great way to wrap everything up there. Well said. Ultimately, we each have our own portfolio sizes, risk tolerances, and time frames, and those have to be accounted when in making an investment, and no one can do that for you.
Absolutely. So currently, I'll just give everybody a recap of what I'm currently doing. I'm not touching these 26th of Novembers at all. I see
Hmm.
downside going into Friday just because Thanksgiving holiday, and it's probably not going to it's probably not going to bounce significantly enough for it to recover all this value that's decayed out of the options due to theta. But December 3rd, if you really want to be a risky trader, then I guess you could do those. But for me, December 17th is the closest that I'd be willing to play these, and that's what I'm planning on doing. So once we get a little bit closer to the end of that Fibonacci timeline, that's when I'm going to be buying my calls.
Mm, cool. I love it.
Yep.
Thank you so much for stopping on once again, especially on you know, a bloody day, for lack of I'm not going to sugarcoat anything, not going to beat around the bush there. Not the best day. Overall market was down. A lot of these individual stocks were down. I mean, Tesla, a 1.1 trillion dollars, down like 8% today. So the market took no prisoners today, and I'm glad that these are the days to really look at your DD and analyze what you're looking at. Know what you're in, know what your plan is, and then execute accordingly. So I love it. I appreciate it.
Yeah, no worries, man. I think that that's a good time to stop it here. So it's been fun as always coming on to the channel. And
Of course. And now they can find you on your own. True Demon on YouTube, True X Demon on Twitter. Definitely be sure to check them out, guys.
I guess you can. Thanks.
Yeah, man. Have a great rest of your day.
You too.
See ya.